Yes, welcome to the very first session of CA Final Audit Fast Track Lectures, May 26 attempt onwards. Alright, in 100% English delivery. Okay, so students attending this batch, this particular course, there are two categories of students. One who are doing audit for the first time, alright, and mostly the students are such, alright, who may not have tasted success earlier. I would just say that their success has got delayed. Alright, I will never say that they are struggling. Alright, in fact, they are fighting if they are looking at these lectures. That means they really want to clear. But do not worry for both the categories. For the very first category who is doing audit for the first time, alright, they may feel that, oh my god, is this a revision batch or something? No, I am not going to assume anything. Because even the second category who have studied a little bit earlier, see, please understand, no one recollects audit subject. Alright, so even if student has studied something 72 hours back, alright, it is very difficult to assume that student will remember that today. So obviously, on a very obvious note, there will be no assumption. This is not some kind of revision batch or something. This is a proper course which will cover your entire syllabus in a nice manner. Alright, and to add sufficient and appropriate audit evidence to that, and to give you even more than reasonable assurance, from May 26 attempt onwards, alright, that means from this batch onwards, alright, I have changed my books. Now I have decided that whether it is regular course or fast track course, my books will be the same. Only the teaching approach will change, and I will try to save time in fast track. That also you will realize in the lecture how smartly I have decided that. So let me first give you a walkthrough of the books, alright, so that you are very clear whether you are a regular course student or fast track course student, these books will remain the same. Now, total there are 4 books. First is Standards on Auditing, because total 19 chapters are there. From that, 11 chapters are from Standards. Alright. So this book is a descriptive book of standards. It is a descriptive book of standards which runs, I think, about 230-240 pages. Yeah, 230 pages or so. Okay. Where all the standards have been given in paragraph form, in proper descriptive manner. Alright. Then we have a non-essay descriptive book, non-essay content book, again I think 160-170 pages or so, alright, and it is given in a paragraph form manner. Okay, but obviously regular course students, they keep on asking, sir, whether there is any kind of compact book. Achha, fast track course students keep on asking whether there is any kind of lengthy book, because everyone feels that they are missing out on something. Alright, so what I have done is I have created one smart notes. Alright, this is, I think, 255-260 pages max. Alright, and in this entire book, this covers entire set of 19 chapters. Sir, are you cutting down on content in this? No, I would say trimming, not cutting. Alright, there is no concept that is not covered over here. Alright, that means all the concepts are covered, but little bit trimmed. I have not even changed ICA language. I have spent hours and hours and lots of days and nights. I have missed my wife's birthday also for that. Alright, and I have ensured that I come up with a very nice, subtle set of smart notes. So I call this as CA Final Audit Smart Notes by Pragnesh sir. Alright, which covers all your 19 chapters in a nice compressed manner. Okay. Now, you have the 4th book, that is the question bank. This is the bulkiest book, alright, because obviously what I truly believe is that no matter how many concepts you study, no matter what kind of conceptual clarity you have, alright, unless and until you do not practice enough questions, okay, it is not going to help you. So the only formula for success is that we keep on practicing questions. We keep on doing a lot of questions. Alright, so listen to me carefully. Now this has around your obviously 19 chapters, but the coverage of this question bank is study material questions plus 11 attempts, last 11 attempts, PYQs, RTPs, alright, MTPs. Okay, those things are covered over here. So now what I have decided to be very systematic in future also, because some students are enrolling in Jan, then giving in May, then September. It has become very messy on the student side because of 3 attempts. Alright, sometimes they just skip one attempt thinking that okay, it is just 2 months again, we just have to wait for 2 months, so they give the next attempt. So what I have decided, listen to me, in every May attempt, alright, like this is May 26, alright, I'll be issuing new books in around February, March, okay, which will run for May 26, September 26 and Jan 27. Alright, these books will cover question bank till Jan 26 RTP. Jan 26 question paper suggest answers were not out by the when we went for this question bank, so that will be incorporated separately in a PDF. Okay, but listen to me, this will be my version of the book, but then let us say there are some students giving May 26 or September 26, or maybe some Jan 27 students have joined fast track. It's a combination. Alright, so let us say over here there are some amendments, here there are some amendments, then what to do? Then for this entire version, this entire cycle, I would say, for May 26 to Jan 27 cycle, I will create one Google Drive. Alright, and if there are any changes to this book, I will upload in that Google Drive, so that there is no to and fro of question answers from student side. Are there amendments? Are there changes? What has happened? This has happened. Alright, and in Google Drive you will see the file upload date. Okay, so automatically you will come to know, okay, this was uploaded for May 26. Anyways, I will give clarification, but automatically you will come to know from that. Okay, so this is how we are going to be very systematic. No matter whenever you are giving attempt, you will always have latest material with you. Have I made myself very clear? Yes sir, yes sir. Why for yes? Yes. Alright, chalo. Now sir, how we are going to ensure proper coverage in this fast track? So I think by giving the same books for regular and fast track, I think I have made myself very clear that we are going to cover everything, but my teaching style will be different. So in fast track course, I will be teaching mostly from the smart notes. I will give you relevant markings, that okay, which paragraph. Let us say if for example, if I say that I have covered this page, alright, then I tell you, okay, in smart notes we have covered these many pages of the descriptive book. Okay, then fast track students, if they want, they can read on their own the descriptive book, but my main focus will be to finish this entire smart notes, alright, and to cover at least 80% of the question bank. This question bank, if you see, it is around 700 pages. Alright, so to cover 80% of the question bank, that will be my focus. Alright, wherever required, we will go to the descriptive books. I have given this descriptive book so that students always feel that they have all the kind of material that is needed. Frankly speaking, if you are running short on time, alright, then for you, smart notes plus question bank is the max that you are supposed to do. Beyond that, it is nothing else is required. Okay, I can give it to you in writing for that. Sir, what about test papers? Alright, so along with any course that you take my CA, inter, final, regular, fast track, alright, any course that you take, we have now devised a system, alright, whereby you will get a Google Drive, you will get the test papers uploaded over there, alright, and along with suggested answers. Achha, you will also get a link to submit your scanned answer sheet. Okay, your answer sheet in a scanned PDF, and my paper checkers will check that. Okay, they have been very well trained by me. I have spent about 3-4 months in training them, alright, on how to check. I have checked about 100 papers or so that they understand. Alright, my paper checkers will check and give it to you. Sir, how many test papers? In the test series, I have divided your subject into 4 unit tests, alright, plus 2 prelims. Entire test, 4 unit tests plus 2 prelims within next few days, because I am updating it. So as on this date I am updating it, alright. So within next few days you will get the link, alright, with the coverage. Okay, that these 4 chapters are in unit 1, these 5 chapters are in unit 2, alright. Accordingly you will get it. You will get your question papers. So whenever I am done with that syllabus, you can solve it on your own. You can upload it on the link, alright, and my paper checkers will check it. That is why there is some fees involved in buying these lectures, because I am providing many services to the students, alright. Obviously everything comes at a cost. Okay, so I hope I have made myself very clear over here. The biggest reason why students are not clearing in audit subject, the biggest reason, alright, is, I don't think I need to tell you, I think you know it, it is lack of practicing the papers. Let me tell you, if you finish my smart notes, if you finish my question bank, alright, and if you sincerely follow my instructions, and if you practice the papers, if you clear in my prelims, all right, and then if you do not clear audit subject, then I think, all right, I will apologize to you, all right, I will touch your feet also, all right, but let me tell you very clearly that 95%, 90% of the students are not following all the instructions. I am trying my level best that they keep on writing the test, You will not believe, I have one dedicated employee to keep calling the students who have taken recorded lectures that what are you doing, please keep on writing, There is a cost involved in that also, but students are not giving the test. That is the harsh truth. They want to increase my bank balance every attempt, alright. So please understand one thing, that if you do not practice papers, it will be difficult for you to clear. At least I expect you to give the 2 prelims. Right? So tell me, students who are attending live, will you promise me that you will write the test papers? Yes. In first lecture, everyone promises. Huh? I was taking morning batch face to face live over here. They thought for 5 seconds before promising me whether they will write the papers or not. Okay. Chalo. So I believe and I really hope that you write the papers. I really want you to clear your exams here. Okay. Chalo. Now, on that very positive note, I will start with my favorite syllabus, that is standards. Alright, first we will go with standards. So this is live session going on for about 6 hours daily. So I've already sent an audio note on your community that for the first half we'll be doing standards, then a 30 minutes break. Alright, and then in the second half we'll be doing non-standards. Okay, so that you are focused throughout the lecture. We had a very nice morning session and students were comfortable with that, so don't worry, don't just keep on thinking, oh 6 hours, don't keep on thinking like that. Okay, chalo. Now everyone over here, acha, every day after the lecture what you are supposed to do, how much is your homework, I will give it to you. So if you dedicate lecture plus 2 hours daily for me, alright, then in that case your audit subject is done. Don't worry about it. Okay, chalo. Now, and for the students who are keeping their cameras on, special thank you to you. Alright, really helps to keep the lecture very interactive. Chalo. Now everyone over here, as of now, I just want you to take out a notebook, alright, and just discuss few things with me. Okay, then we will start officially the syllabus and everything. Alright, because I want to start something, but before that I want to build your concept. Okay, everyone over here, let us say, acha, book means you should just have some 20-30 full-scape pages with you. Alright, it will be like rough workings that we take during the lecture. Otherwise, everything is printed over here, don't worry. Okay, chalo. Let us say that there is a CA in practice. Alright, and there is this client Alpha Limited. Alpha Limited provides books of accounts to the CA in practice, and Alpha Limited wants CA in practice to check the trade receivables, to examine the debtor statements, to obtain confirmation from the debtors, to verify receipts in bank account. Alright, and then they want this CA in practice to give a final report to Alpha Limited, giving the list of trade receivables, then transaction amount, okay, amount received, pending. Alright, and they want you to rate the trade receivables, alright, as medium risk, high risk, and low risk. Alright, so they want you to give this report. Let us say you are that CA in practice. Okay, my question to you is, Tell me. Will this, because you're a final year batch, so I'm just straight away starting with a question. Alright. Will this be considered as an assurance engagement? Yes or no, sir? Y for yes and for no. Will this be considered as an assurance engagement? Yes or no, sir? Alright. So we're getting mixed reply, yes, no, yes, no, yes, no, yes, no. Okay. Now let me be very, very clear to you. Let me be very, very clear to you that this entire engagement is a non-assurance engagement. This is the non-assurance engagement. Listen to me very carefully if you want to understand standards properly. Alright. The engagements that we perform, the engagements performed by CA in practice, they are of two types. Assurance engagements and non-assurance engagement. Normally, CA students, they have this misunderstanding that if you are checking something, that is an assurance engagement. If you are verifying something, that is an assurance engagement. If you are examining something, that is an assurance engagement. The answer is no. Assurance engagement is an engagement where client will give data to CA in practice. CA in practice will verify that data. After verifying, CA in practice will get sufficient and appropriate evidence. Then he will form a conclusion or opinion. Then he will form a written report. And this report, listen to me now, this is assurance. The next line will give you the meaning of assurance. This report should increase the confidence of the stakeholders other than the internal management. That means when the report can increase the confidence of some third party, that is when we call it as an assurance engagement. Tell me everyone, this entire report was an I for internal report or E for external report? Was an I for internal report or E for external report? It was an internal report. Tell me, this report had F for facts or O for opinion? It just had F for facts. So this was just a factual report, alright, meant internally for the management. Yes, CA in practice has examined the data. Yes, he has verified the data. Yes, he has tried to obtain confirmation. That does not make it an assurance engagement. For an assurance engagement, the report should end up increasing the confidence of the stakeholders, of the users, other than the internal management. I hope I have made myself very, very clear. Yes, sir, yes, sir, yes, sir, yes, sir, yes, sir. Alright. Then, our above example is actually a non-assurance engagement. Sir, why are we understanding this in so detail? Because listen to me. I am going to start with standards. These standards are divided into 1, 3 and 5. Sorry, there is a frame issue. These standards are divided into 1, 3, 4 and 5. This is assurance. 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 Non-assurance. The last category, standards on related services, that is actually a non-assurance category. In that, client will give you some work, you will finish that work. It could be preparing the data, it could be examining the data, whatever it is, just meant internally for the management. There is no opinion involved which can actually the stakeholders management. Sir, example, that is exactly what I started with. I don't want to start with student standards and auditing deal with audit of financial statement. That is fine. You know it. We will discuss it. That's okay. But you know what? In exams, if you want to understand the questions with respect to standards, the very first thing is that you find out which category of standard is applicable. Right? Whether it is SA, SRE, SE, SRS. As of now, I have just discussed very limited things with you. I just told you that SA, SRE, SAE, they are assurance engagements. What is SA, what is SRE, what is SAE, I have not discussed. And SRS, standards on related services, the last category, that is non-assurance. And whether assurance or non-assurance, whether assurance or non-assurance, whether assurance or non-assurance, it is important for you to maintain quality throughout the engagements. And that is why SQC, whether you are doing SA, SRE, SAE, SRS, does not matter. SQC is always applicable. It just deals with quality control to be maintained by a practicing CA across all the engagements. Listen very carefully. You should set your target today. 11 chapters of standards. The first 11 chapters. Institute has said 50 to 55% of weightage. If you are following me properly on my Telegram channel, multiple times I've uploaded, whereby in every single attempt, May 24, September 20, for every single attempt, I have given a weightage analysis, right? And from every single chapter where the questions have been asked. Okay. Obviously, standards I have seen has an impact of 55 to 60 marks. 50 to 55% means I hope you understand it will be 55 to 60 marks. All right. And these 11 chapters are divided into parts. Assurance engagements, non-assurance engagements, and quality control. One chapter is for quality control. One chapter is for non-assurance engagement. And the balance 9 chapters are for assurance. Very first thing in exams is understand which category of standard is applicable. Forget about which essay number or something, what is the question answer, everything keep aside. The very first thing that you will do is to understand which category of standard is applicable. All right. And for that, you should be very clear what is an assurance engagement and what is a non-assurance engagement. Because if I tell you that you have been appointed to examine trade receivables and provide a factual report, the client, all right, first it should click that this is neither SA nor SRE nor SAE, because this is just an internal report to the client. First it should click that this is SRS, standards on related service. Then we will decide which standard, what should be the question answer. Later on we will decide. I want a confirmation. Is everyone with me? Yes or no, sir? Yes, sir. Yes, sir. All right. Before I move ahead, all right, I just want to copy this much in your notes that what is an assurance engagement. Start with heading assurance engagement. Start with the heading assurance engagement. I may write lot of stuff, but I will tell you what to copy. Copy everything. Unnecessary. That client provides data to CA in practice. He will verify. He will obtain sufficient and appropriate evidence. Be careful while writing. When students were sitting in morning face to face, I could monitor them. For you, I can just pray. Sufficient and appropriate evidence. I have not written sufficient and appropriate audit evidence. I have just written sufficient and appropriate evidence. Sir, what is the logic behind that? I will tell you. Client provides data to CM practice. Verify. He will examine that data, verify that data. It will give you sufficient and appropriate evidence. Will form conclusions / opinion. Then you will develop a written report. Which will increase the confidence of the stakeholders other than the internal manager. Increase the confidence of the stakeholders other than the internal manager. So this actually is assurance. All right. I hope you have written the meaning of the word assurance. Yes. Now please write down. Assurance engagements. We'll pull out 4 arrows from that. There are different levels of assurance. One is absolute assurance. Absolute assurance means guarantee. But this is not. Studied it intercier, not patience. Alright. I don't need to repeat that syllabus. Because anyways, you don't have to buy at it. Then we have reasonable assurance. Even though you may be aware about these words, but still write just to get some grip again. When we start, we have to start properly. Reasonable assurance. Can you give me the English for this? High level of assurance. But not a guarantee. High level of assurance, but not a guarantee. And when you write little bit, you will get in the flow. High level of assurance, but not a guarantee. Now listen to me. The best example for reasonable assurance is SA category. Standards on. The best example for reasonable assurance is SA category, standards on auditing. Alright. I need to discuss a little bit about it. Okay. Don't write this, huh? Don't write this. So there are various types of audit. Audit of financial statements, audit of taxation. Alright, then we have concurrent audit, continuous audit of transactions in banking industry. Then we have internal audit. Then we have, what is that? Systems audit. Right. So many types of audit that go on. My question to you is, do you think standards in auditing will be applicable to all types of audit? Think standards auditing will be applicable to all types of audit? Alright. Standards auditing are applicable only for audit of financial statements. In fact, let me be more clear. Financial statements are also of two types. One is historical financial statement, and second one is prospective financial statement. Prospective financial statements, they show the future. Alright. Which you will see that whenever you go for pitching to an investor and stuff, you have to project the future. So projected financials are given. Historical financial statements, they deal with the past. Actually, SA category is made for this audit of historical financial statements. In fact, I need to be even further clear. When I say historical financial statements, that means balance sheet, P&L, cash flow, everything will come to your mind. But let us say, for example, you are a CA in practice. I want you to audit only my inventory. I repeat, I want you to audit only my inventory. See the inventory. Still, SA will be applicable because it is a part of the financial statement. Therefore, we say that SA category is for audit of historical financial information. This is the correct meaning. You say audit of financial statements, wrong. Because financial statements can be of two types, history, future. You say audit of historical financial statements, still very average answer. Alright. Because when you say financial statements, it means the entire set of financial statements. When you say audit of historical financial information, perfect. Because that means whether even if it is a part of the financial statement that you're auditing, then essays will come into picture. Alright. So I repeat. SA category is for audit of historical financial information. Right? Never just say financial statements casually. Come on. SA category is for audit of historical financial information. Yes, sir. Yes, sir. Yes, sir. We go back. That is your reasonable assurance, high level of assurance, but not a guarantee. Okay. That is why we say in the audit report, The best of our knowledge and information available with us, financial statements show a true and fair view. All right. After reasonable assurance, little lower than that, lower than reasonable, we have limited assurance. It is lower than reasonable assurance. It is lower than reasonable assurance. All right. We have limited assurance, lower than reasonable assurance. Okay. Now listen to me. The best example in the market, for limited assurance, all right, is review of quarterly financial statements of listed entities. The best example in the market is review of quarterly financial statements of listed entities. All right. And that is why the entire category has been made for that, SRE, standards on review engagement. Sir, what is the difference between reasonable and limited? I've already made you right, but still I'll make you. Raju is a good. Second, Raju is not a bad boy. Which one makes you feel more comfortable, first or second, about Raju? Obviously first, number one. All right. So in reasonable assurance, we clearly say, to the best of our knowledge and information available with us, financial statements are showing a true end. We say that yes, it is good. Whereas in limited assurance, we say, with the limited examination that we have conducted, okay, nothing is bad. We don't say everything is good. We say nothing is bad. And nothing has come to our knowledge which suggests that financial statements are materially missing. We say that, okay, nothing is bad. We will not say that it is good. Okay? You will understand when I get more deeper, when I dive more deeper into the concepts, you will understand. I'm just giving you the fillers right now so that you are through, at least you get the clear introduction of this. All right. SA is standards on auditing and SRE is standards on review engagement. When I say SRE, that is nothing but review of historical financial information. Come on, tell me. Review of historical financial information. Come on, tell me. Review of historical financial information. All right. I hope everyone is clear with this. Yes, sir. Yes, sir. Yaar, look at this, brother. Look at this. Historical financial information. Historical financial. This is audit. This is review. But the common thing between them is historical financial information. Historical financial information. All right. So now comes, these are like 80s, 90s generation. Now comes the Gen Z and something different, man. SAE, standards on assurance. SAE says, I am bored with this historical financial information. I want to see something different. So SAE says other assurance engagement. Examination of information other than the financial statements. In fact, please write down over here. This is the most appropriate explanation. Other than historical financial information. I repeat, other than historical financial information. There are three standards in this. All three dealing with something different, but other than historical finance. The best example for this category is audit of projected financial information, future forecast. That is the best example for this category. Standards on assurance engagement. All right. So now one thing is very clear. SA assurance, reasonable assurance, audit of historical financial information. Review assurance, yeah, assurance, but limited assurance. Again, of historical financial information. SAE, assurance, yes, assurance. Come on, tell me, in SAE, which assurance, reasonable or limited? Which one I told you? Come on, just 2 minutes back I told you. SAE, which one, reasonable or limited? SAE category, which one? You missed it in your afternoon session? You are sleepy. The answer is, sir, I have not discussed. Smartly, I have not discussed it, but you are doubting yourself. Right? So listen to me. It is not easy to discuss this in introduction lecture. Because there are 3 standards and all 3 have different requirements. I have not said this is reasonable assurance or limited. That I will discuss when I actually get into that chapter. Right? But as of now, at least one thing is clear, that SAE, all right, is examination of other than historical financial information. So come on. Don't write this. This is just for your clarity. SA, what is the level of assurance? Reasonable. And it is examination of historical financial information. SRE, what is the level of assurance? Limited. And again, examination of historical financial information. SAE, as of now can't say. We'll have to learn the chapter for that, because every standard has a different requirement over there. And examination of other than historical financial information. All right. I want a confirmation. Is everyone clear up till here? Yes or no, sir? Yes, sir. Yes, sir. Okay. Now listen to me. The last is when you do not give any kind of assurance. We just perform services to assist the client. We are just acting like an assistant to the client. Best example for this is SRS category. And the best example for SRS, I already started the lecture with that. Trade receivables, you are checking but not giving any kind of opinion. SRS category. Alright. So listen to me. Let me complete the table. SRS assurance. But tell me, if you see my book, in SRS category, see here I have written, in SA category I have written historical financial information. In SRE also I wrote historical financial information. Here I wrote other than historical financial information. If you see, I have not written anything over here. I have just written performing procedures as agreed with the client. Because which data we will check or which data we will prepare, in which data client wants us to assist, that client will tell us no. That client will tell us. Everyone over here. Examination of as required by the client. Alright. And it may not always be examination of. It can also be preparation of some data, because we are not giving any kind of assurance. We are just helping them. Right. Okay. And hello, across all of these engagements, SQC is always applicable, because SQC tells you what kind of policies the firm have to maintain the quality, like training your articles, the of ethics to be followed, that these kind of things, documentation to be maintained, these kind of things will remain common across the entire subject. I want a final confirmation. Is everyone through with this now? Yes, yes. Okay. Now listen to me. We will just play one game. Huh? You have to guess the category. Okay, I'll give you the assignment. I'll give you the engagement. Just tell me SA, SRE, SA, SRE. First, your client has asked you conduct an examination of prospective financial information. Guess the category. Which category? Very good. SAE category. Listen to me. Your client has asked you to examine the prospective financial information and provide limited assurance. Now which category? Still it will be SAE only. Na? Alright. The moment some students hear limited assurance, they say SRE. Alright. But in SRE, the first thing is that you're going to examine historical financial information. Right? Don't forget that. When it comes to prospective financial information, it can never be SRE or SA. Okay. Chalo. Second. client has requested prepare the final accounts from rough trial balance and so client has given you rough trial balance and books of accounts, and client has requested you to prepare the final accounts from that. Okay, prepare the final accounts from. Oh, tell me, this is. I'll give you MCQ. But I'll give you MCQ. Option A, SA. Option B, SRE. Option C, SRS. SAE. The last option is none. Everyone going for C? All right. The answer is obviously yes, SRS category. Okay. Because you are going to prepare, not check. And anyways, you are not giving any kind of assurance over here. There is only one category for non-assurance engagements, and that is SRS category. So obviously yes, SRS standards on. All right. Let us say that your client has asked you prepare prospective financial information. Is the category? Tell me which category. Client has asked you to prepare prospective financial information. Very good. Now you are listening, thinking, acting properly. Right. This is SRS category because you are going to prepare. There is no. Yeah, it is prospective financial information. Yeah, prospective financial information is covered in SAE, but then it is SAE is an assurance engagement, whereas this is a non-assurance engagement. Well, so obviously this is your SRS category. Very good, very good. I hope you understand. In the test series, I keep playing with the students the category itself. For example, I will give you one long question of 20 lines. All right, it will be a very easy question. I will ask you to draft the opinion. Right. I will say that there are 10 mistakes that you found out. Client has rectified those mistakes. I will ask you to draft the opinion. Obviously, it is a clean opinion. And client has rectified the mistakes. So financial statements show a true and fair view. But somewhere in between, in the 12th line or 13th line, I will tell you that this is engagement, review engagement. Now in review, it is limited assurance. So you can't write Raju is a good boy. You have to write Raju is not a bad boy. Can I say your English is going to change over there? Yes or no, sir? Yes. Your wordings will change? Yes. Now tell me, if some student has not read this properly, that has the knowledge, that has done all the hard work, but while reading the question, he is just assuming that question is from SA category. Right. Then obviously it is suicidal. If you want to fail the exams, then fail by a very big margin. Like for example, out of 100, you are 52 marks. Great. There is no guilt, no? Because you are so dashed, right? And there is no guilt at all. But when you score that 37, 38 and such kind of silly mistakes you commit, that is when the depression strikes. So it is very important that once you know the concept, you try to score marks out of it, right? And you pour 10 liters of hair oil before you go into that examination hall. And you understand that if there is any question with respect to standards, first I will check whether it is a quality control question, whether it is an assurance engagement question, or whether it is a non-assurance engagement question. Then from assurance engagement, I will make up my mind whether it is SA, SRE or SAE, and only after that I will start attempting the question. This is the very first step to ensure that you don't get zero. I want a confirmation. Are you clear with this? Yes or no, sir? Yes, sir. Yes, sir. All right. So as you can see, I have given everything over here: SQC, SA, SRE, SA, SRS. Just a little bit of writing we were doing so that you are, on track. I have given this: audit provides reasonable assurance, review provides limited assurance. Right? SAs apply to audit of historical financial information. SAs will be for other than SAE will be for other than historical. I have given all that. SRS also I have given. Okay. So the very first introduction work is done with you with respect to standards. All right, 11 chapters of standards as you can see, and we are going to rock all of these 11 chapters. All right. Now, students, I'm going to start with my favorite category, that is SA, Standards on Auditing. But again, I want you to do a little bit of writing practice, understand few things so that I can start with the chapter. All right. Everyone over here, fresh page if possible, or you can continue, that's okay. Standards on Auditing. All right. Tell me, is Ind AS are Ind AS applicable to all companies? Are all companies supposed to follow Ind AS? Tell me, but AS accounting standards, can I say, are applicable to all companies? Yes or no, sir? Yes or no, sir? Accounting standards, AS. No, even some accounting standards are not applicable to certain companies. I mean, not companies, I would say, some entities. Like if I go outside, there is one proprietor running a hardware shop. You think he will follow AS9 revenue recognition? Obviously, no. What I'm trying to tell you is that when it comes to AS Ind AS, right, there is a certain thing that you learn in that subject, that to whom it is applicable, where it is not applicable, which entities are exempt and stuff. But when it comes to SA's, standards on auditing, have you ever thought about this? Whether it will be applicable to all kind of audit of historical financial information, or there will be. Let us say there is a proprietor. All right, and that proprietor is getting voluntary audit done. Don't write this, and this is just for practice. Voluntary audit done. No one is asking him to get the audit done. He's just appointing you as a voluntary auditor. All right, because he wants to submit to the bank his audited financials, so that there is a bank loan that the bank can sanction. My question to you is that if you are a CA in practice, all right, and that proprietor, okay, has appointed you for voluntary audit, you are a CA in practice and that proprietor has appointed you for a voluntary audit, will SS be applicable to such engagements? Will SS be applicable to such engagements? Yes. And on what basis you are saying yes? Because in the preface to the auditing pronouncements, it is written that standards auditing are applicable to audit engagements, and audit engagements inter se definition. Auditing is an independent examination of financial information of an entity, whether profit oriented or not, irrespective of its size or legal form, and such an examination is conducted with a view to express an opinion thereon. Oh, so SAs are applicable to all types of audit engagements which are dealing with audit of historical financial information. SAs are applicable to audit of historical financial information of all types of entities, whether it is voluntary audit, statutory audit. Yes, sir. Yes. All right. Everyone over here, the very first concept which I want to clear up, which I know that you are aware about it, but still I want to just discuss. Now, this word you would have used so many times in audit subject, inter CA level. Applicable financial reporting framework. Wherever you find space, you write this. Applicable financial reporting framework. Obviously, when an auditor is conducting audit, he has to verify whether financial statements are properly prepared. Properly prepared means whatever guidelines are applicable to the entity, whether they have followed that or not. The applicable financial reporting framework is nothing but the guideline applicable to the entity. For preparation of financial statements. Guideline applicable to the entity for preparation of financial statements. Now listen to me. Achha, financial statements means now I am assuming that you are understanding that we are talking about historical financial statements. Financial statements are of two types. One is general purpose financial statements. Second one is special purpose financial statements. General purpose financial statements, what you actually prepare in your FR subject, something that is prepared for all the use. Okay. But this slang English, normal English is okay, but we'll have to write it properly. Financial statements prepared serve common financial information needs of all users of financial statements. Financial statements prepared serve common financial information needs of all users of financial statements. Yes, sir. Yes. Something that is commonly prepared for everyone. Okay. Whereas special purpose financial statements, normally you will see this in business combination, amalgamation, merger, acquisition, all right, whereby as per the needs of the investors, the financial statements are prepared, right? So financial statements prepared serve specific information needs of the intended users of the financial statement. Financial statements prepared to serve specific information needs of the intended users of the financial statement. Now listen to me. You have total 38 essays. All right. Essay 200, essay 720. That means 35 essays are dealing with audit of general purpose financial statement. Why I am teaching this right now? Whenever I take up any essay from 200 to 720 series, you can imagine what if I'm auditing Reliance, what if I'm auditing Tata, Mahindra. You can imagine like that, right? And you can ask questions from that. You can think like that. Okay. Whereas SPFS is your essay 800. Well, there are 3 essays in 800 series: 800, 805, 810. SPFS is not entire 800 series. It is only essay 800. I want a confirmation. Are you clear with this? Yes, sir. Okay. Now listen to me. Listen to me. This is just very basic. I just want to build upon this. The general purpose financial statements that you audit, they are prepared based upon some kind of applicable financial reporting, like Schedule 3, Ind AS, AS. That is an applicable financial reporting framework. But you know, there are 2 types of frameworks. There are 2 ways in which it is presented. If you get out of your house, all right, just for some function, or maybe going for an outing with friends, or maybe just meeting someone downstairs, there are 2 categories of people, you know. One, before getting out of the house, you will actually see whether you're wearing proper clothes, whether your hair is groomed, all right, then you know, shoes and everything is neat, all right, perfume, you're smelling good. You will take efforts to ensure that your presence is pleasing, all right. Second category, normally CA students are not in this category. Second category of students are, students, second category of people are, that what is the minimum requirement to get out of this house? You should have clothes. Which clothes? Just clothes. By hair, there is no need, Baba. Perfume, what? That other person can always shut his nose. That second category of person is just thinking what is the bare minimum requirement. Alright. Similarly, financial statements are also of 2 types. Financial reporting frameworks are also of 2 types. Reliance Industries Limited framework. They follow Schedule 3, yes. They follow Ind AS, yes. But they also take additional responsibility to provide additional notes to accounts to ensure that everyone who is reading those financial statements is understanding what is written over there. Such kind of effort, when it is taken, it is called as fair presentation framework. It's called as fair presentation framework. Fair presentation framework. Now, when I say fair presentation framework, why do you think Reliance CFO is preparing financial statements in such a nice manner? Because he's a nice man. No. Schedule 3 wants Reliance to do that. In Schedule 3, they have written one line that these disclosures are minimum disclosures. There is an additional responsibility on the management to provide additional disclosures in order to explain the effect of material transactions. And that is why they are doing it. So listen to me. It is not because of Reliance CFO's kindness or great attitude. It is because it is requirement of Schedule 3. So Schedule 3 wants that you have to follow what I am trying to tell you. Compliance with the requirements of the framework. Yeah. Compliance with the requirements of the framework. Compliance with the requirements of the framework. Plus, and Schedule 3 has also put an additional responsibility on the management. Schedule 3 has also put an additional responsibility on the management. Provide additional disclosures in order to achieve fair presentation. Additional responsibility on the management. Provide additional disclosure in order to achieve fair presentation. That is why Schedule 3 and Ind AS, when you combine it, it becomes a fair presentation. That is why in Reliance you may see 200 notes to, in Tata's you may see 300 notes to accounts. Right? It's not like they will all give only 20-30 notes to. All right. That second category, that is the bare minimum thing required to get out of this house. Right. Cooperative society accounts. If you see cooperative society accounts, the format is given by the registrar. They will just fill up that format and give it to you. Because the registrar himself also does not require management to provide additional disclosure. Such kind of frameworks are called as compliance frame. Compliance frame. It just requires compliance with the requirements of the framework. Compliance with the requirements of the framework. And there is no additional responsibility on the management to provide additional disclosure. In order to achieve fair presentation. There is no additional responsibility on the management. There is no additional responsibility on the management to provide additional disclosures in order to fair presentation. There is no additional responsibility in the management to provide additional disclosure in order to achieve fair presentation. Yes, sir. Yes, sir. Yes, sir. Okay. I want a confirmation. Are you through with this? Achha, why am I teaching this concept? Because this entire impact you will see in audit report. Whenever you are preparing an audit report, if you are expressing an opinion on the financial statements, if you are expressing an opinion on the financial statements prepared under fair presentation framework, what they have taken the effort to achieve fair presentation, can use the phrase and fair view, or you can also say presented fairly. You can use this while expressing the opinion, because they have taken that effort to provide additional disclosures to achieve fair presentation. However, when you are expressing opinion on financial statement, prepared under compliance framework, you are not allowed to use and fair view or presented fairly. You are not allowed to use and fair view or presented fairly or not. Then we will simply say, yes, these financial statements are materially prepared as per applicable financial report. But we will not use the word true and fair view. That is why you are understanding this concept. Because any time, in any chapter, all of a sudden they will use fair presentation compliance. It should be clear what they are trying to say. Applicable financial reporting framework, the guideline that is applicable to entity for preparation of financial statements, GPFS, SPFS, GPFS based upon fair presentation compliance, and the impact is there on the audit report. Fair presentation framework, you can use the phrase true and fair view. Compliance framework, you cannot use phrases. I want a confirmation. Is everyone with me? Yes or no, sir? Yes. Yes, sir. Yes, sir. Yes, sir. Very good. Your first concept of applicable financial reporting framework is over. Now the next concept, please write down. Concept of assertions. Again, another word which will be 100 times minimum in the subject. Concept of assertions. Okay, so concept of assertions will continue. Now, I just want to first have a very simple discussion with you. You would have understood my style by now. We'll just go with some simple discussions, then we'll build on technical language. Alright. So tell me, when an auditor is conducting audit of financial statements, alright, these financial statements are prepared by management. Okay. So, can I just say it in very simple words that auditor is trying to verify whatever management has explained in the balance sheet, P&L, notes to accounts, cash flow. Alright. So, in simple words, auditor is verifying whatever management has explained in the balance sheet, P&L, cash flow, notes to accounts, etc. Alright. That is what auditor is verifying. As simple as that. Okay. So let us make it very practical. Alright. So let us say that just put up okay, so this is Reliance annual report. I don't know which PDF. 31st March 25. Oh, video is latest. Huh? I know that Sanju Samsung got justice. Right? Video is latest. Okay, so everyone over here. Otherwise, they will say 31st March 25 is old video. So, let us say you are the auditor of Reliance Industries Limited. Okay. Auditor of Reliance Industries Limited. Let us say this is the balance sheet that they are presenting. Okay, sorry, I'll just adjust. This is the balance sheet that they are presenting in front of you. Okay. Now, the moment you see non-current asset, all right, property, plant, and equipment. Okay. See, the moment you start seeing things, it is as if someone is trying to explain to you. The CFO is telling you, hello, non-current asset, we have property, plant, and equipment. Current year figure is this, previous year figure is this. You want to know more? You can go to the notes to accounts. Okay. Then when you go to the notes to accounts, is a jungle of notes to accounts. You go to the notes to accounts. You see this property, plant, and equipment. Own assets. Tell me, own assets means can I say they are trying to say that we have the control over these assets? Yes or no, sir? Yes, sir. And if they say own assets, land, building, don't you think that you will go through and verify these agreements whether they actually own this land and building or not? Yes or no, sir? Yes, sir. So tell me, if you want to understand that these are not fake assets, can I say on sample basis you may visit some of these land and building also to check whether it actually exists or not? Yes or no, sir? Yes, sir. Come on, congratulations. You have started verifying management's assertion. Whatever management has explained to you in the financial statements, you have started verifying that. I repeat, whatever management has explained to you in the financial statements, you have started verifying that. That is the meaning of the word assertion. If I am trying to explain something to you, you will start verifying what I am trying to explain. What am I trying to say? That is nothing but you are verifying my assertion. So everyone over here. Now the moment, don't write this. The moment you see land and building and stuff, alright, is any asset or any liability or any balance sheet item. First of all, you want to verify that whether it actually exists or not. It should not be fake existence. Then you want to verify. Tell me, will land be depreciated? No. Unless Donald Trump finds that you have oil. Alright, so will land be depreciated? No. Building and stuff depreciation? Yeah. Revaluation of land and building both possible? Yeah. Alright, some development cost, some additions to it, all of that possible? Yes. Obviously, you would like to verify the value. Whether whatever balance has been recorded, whether it is recorded at an appropriate amount or not. Alright. After all the adjustments. Then, the moment they say own assets, alright, you will say, oh, okay, give me the documents, show me the documents. Alright. I want to see whether you actually hold the title to these assets or not. That means you would like to verify R and O, rights and obligation. Rights and obligations. Then, what if they have more land and building and they have not completeness? Means there should be no omission. Alright. Then, tell me, if there is, if they incur some wages while construction of the building, will it be C for capitalized or E for expensed out? And obviously, it will be C for capitalized. So, if they have incurred certain wages for construction of building, whether it is being capitalized or not, this is classification. Students misunderstand classification a lot. Classification just means correct accounting. Whether things have been recorded in the correct account or not. Like construction, building being constructed. That is a CWIP, capital work in progress. That is called as classification, whether things have got the right account or alright. Then whether it is properly presented, disclosed, accounts have been given, right, that will be presentation and disclosure. So listen to me. Whenever you are verifying any balance sheet item, these are the assertions to be verified. EVR, existence, valuation, rights and obligation, completeness, classification, D for disclosure, in presentation and disclosure. Everyone. Now you are slowly, steadily understanding the concept of assertion. What is assertion? Whatever they are explaining, we are going to verify. Whatever they are explaining, that is assertion. And for that, we want to obtain sufficient and appropriate audit evidence. Please put one more down arrow. Write down. Auditor shall obtain sufficient and appropriate audit evidence. See, now I'm writing sufficient and appropriate audit evidence because I'm in audit subject, SA category. Auditor shall obtain sufficient and appropriate audit evidence to verify management's about various transactions, balances, and disclosure. for various transactions, balances and disclosure. Now, what are the assertions to be verified? For any asset liability balance sheet item, we will verify EVR CCD. Write down please. Assertions to be verified will divide into two. Assertions to be verified we will divide into two. Asset liability balance sheet item, EVR CCD. EVR CCD. E for existence. Sir, what is this E for existence? You know what is existence. Instead, I am writing it officially. Whether asset liability actually exists as on balance sheet. Whether asset or liability actually exists as on balance sheet. Yes, sir. Yes, sir. Yes, sir. Okay. Then valuation. Whether balances have been recorded at an appropriate amount. Whether balances have been recorded at an appropriate. Whether balances have been recorded at an appropriate. Rights and obligations. Control over assets. Control over assets. And you will verify the liabilities of the entity. Whether entity is actually liable for the liabilities that they have shown. And whether they actually have the control over assets for the rights that they have. Completeness is no omission. Whatever should have been recorded has been actually recorded. Classification is nothing but correct accounting. Classification is nothing but correct accounting. And presentation disclosure is nothing but your format and notes applicable financial. Going Vishnu, keep going Vishnu Narayan. How are you? Good. Alright, you're over here. EVR CCD. Now listen to me. Whenever you are verifying any P&L item, basically any transaction, it is purchase, sales, whatever it is. Achha, come on, let us discuss it practically. For example, you are conducting audit of a coaching class company and you are verifying admissions. Alright. And that date of admission, whether it is in the right accounting period, that will be called as cutoff, whether cutoff has been followed. Amount in the invoices. That whatever is your basic fees, GST, tuition fees, this, whatever it is. Amount, accuracy. Then, okay, this is the invoice, this is the student register, the student name is there, the ID card has been issued, the bank statement where we have received the fees. Okay, that means this is a genuine transaction, it is not fake. It has actually occurred in reality in the name of the entity. Occurrence. Alright. So everyone over here, when it comes to any kind of P&L item, okay, we will verify CA, CCD, OCA, CCD. Alright. First O for occurrence. See, normal English meaning and audit vocabulary. Alright. Normally these things are a little different. For example, normal English, qualified opinion is opinion issued by qualified person. Alright, but in audit we know what is qualified opinion. So what I want to tell you is, don't go by normal meaning. Normal meaning of occurrence is that whether something has actually occurred or not, and it should not be fake. Oh, this is a big mistake. Tell me everyone. Tell me everyone. Please type it in the chat box. Is Anushka Sharma Married? Yes. Yes. But is she married to me? He lost me. Lost me. Her loss. Okay. What I want to say. Anushka Sharma married? Yes, it's not fake. She is married. But not with me. Anushka Sharma's marriage has not occurred in my books of so occurrence just does not mean that it should not be fake. Occurrence should be that it should be genuine transaction in the name of the entity. Alright. If entity has booked certain expense but those expenses do not belong to the entity, that means occurrence is violated. Everyone over here. Whether transaction has actually occurred in the name of the entity being audited. In the name of the entity being audited. Yeah, yeah. Whether transaction has actually occurred in the name of the entity being audited. Second, C for cutoff. Correct accounting period. Cutoff, correct accounting period. A for accuracy. Accuracy whether amount is recorded correctly. So correctness of the amount, if you write it in short. Correctness of the amount. That is accuracy. Be careful, warning bell, warning bell. In a balance sheet item, if you are verifying amount. In a balance sheet item, if you are verifying amount. Right. If you're in a balance sheet item, if you are verifying amount, I will go by valuation. Yes, right. But in a P&L amount, if you are verifying amount, I'll go with accuracy. Okay, be careful with that. Not interchange the words. Then C, 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 D. Completeness, classification, presentation and disclosure. That will remain the same. I'm not again copying it. You can just say same. Hello, hello. Completeness, classification, disclosure and presentation. All of that will remain the same. I want a confirmation. Are you clear with this? Yes, sir. See, any batch that I teach assertion, everyone says yes, yes, sir, yes, sir, yes, sir. Now I will actually check whether you are clear. We'll just practice for some. I will make you write the procedure and you will tell me the assertion being verified. I'll make you write the procedure and you will tell me the assertion being verified. First, in fast track batch, let me give you one warning. In regular course, what is I told you the only teaching style is different. For one concept, we may give them 10 examples. 3 examples are just for concept confidence building, very easy examples where students feel that yes, they know they can crack final C. All right. Then you will give them mid-level examples and then difficult examples. Out of 10 students that he was not able to answer 3, difficult. All right. 6, 7 he was able to answer. Fast track batch, out of 5, 6 examples that we give, maybe 4 may be difficult. All right. Because we want to straight away talk about exams. Okay. So it is possible out of 4 you are not able to answer 3 of them. Break your confidence, huh? Don't feel low. Entire paper is not difficult. Getting my point? But just that when I'm teaching, I have to talk straight away about controversial areas. So I will teach you the concept nicely. After that, maybe in the examples, if this is a regular course, I may give them 12 examples over to you. For you, I will give 4 or 5 examples. But those 4 or 5 will be controversial, little difficult. All right. So if you are not able to answer, do not just think that, my God, I'm not made for this course and stuff. Don't do that drama. Okay. Everyone over here. First. Auditor is verifying whether all related parties have been identified or not. Whether all related parties have been identified or not. Type in the chat box which assertion auditor is trying to verify. Fitness, classification, presentation and disclosure, and occurrence. Alright, very good. The students who are still sticking to completeness, very good. Because normally some 1 or 2 wrote occurrence, one or 2 wrote. Alright. Then normally many students, alright, they talk about many students, alright. They say that, okay, sir, related parties in no accounts and try to think like that. Big confusion happened in the morning lecture. They take about, normally batches take about 5-10 minutes. If you had such confusion, let me be very clear why this is completeness. Because auditor is worried whether all related parties have been identified or not. Nothing has been missed out. Alright, I will tell you how this same question, with 1 or 2 words here and there may completely change the answer. Auditor is verifying whether all related parties have been shown properly or not. Have been shown properly or not. Whether all related parties have been shown. Now this is presentation and disclosure. I hope you can understand the difference between the two. Huh? I want a confirmation from everyone. Are you clear with the difference between? Yes, sir. Yes, sir. Yes. Okay. Hello. Everyone over here. Third. Depreciation, amortization of property, plant and equipment. Tangible. That is what auditor is trying to verify. Then tell me which assertion is. I'll give you 2 options. Valuation, which I am getting as the majority answer. Accuracy. Both. This is both and none of these and stuff, you get addicted to it. No? Oh, none of these. Just want to mark that. No. All right. Valuation. Sir, no, sir. Depreciation is a P&L item, sir. P&L item, you told amount, sir. Amount, accuracy, sir. Accuracy. Understand. Depreciation or amortization is not a transaction. Accuracy, word for some transaction that happens, right? Where you are verifying the amount. So there is a P&L effect. Primarily, these items are for valuation. Getting my point? Primarily, these items are for valuation. All right. Last example. Auditor is verifying whether GST has been correctly charged on sales. Whether GST has been correctly charged on sales. All right. Correct. Perfect. It's a transaction. And for transaction, when you're verifying the amount, the accuracy. Very important for me that you understand the concept of assertion. All right. Yeah, I can give you 15, 20 more examples. But that don't worry. When we the subject, you will. That's okay. Get a very good. Yes, sir. Yes, sir. Yes, sir. That is your concept of assertions. In fact, whatever auditor does in his audit, whatever audit procedures he performs, is always for verifying the assertions. Right. Okay. We are through with the concept of assertions. Everyone on the next concept now. Concept number 3. Concept number 3. Concept of audit procedures. Concept number 3. Concept of audit procedure. Concept of audit procedures. All right. So as an auditor, let us say if you start today, I give you the audit of Air India. All right. What is the first procedure that you will perform? What is the first thing that you will do? Juice, food, dry fruits. Wait. First, you will try to understand the entity. No? You will try to understand their business. All right. Then we will try to understand their systems. Let me go one by one. Straight away, we will not start saying, tickets. Show me the sales, show me the expense. Come on. Check. Watching. You will not start doing this, right? Everyone, listen to me. When you are preparing these notes, finger space over here. The first thing that you will do, you will try to understand the entity and its environment. That means, finger space, you have to keep out the page. Obtain knowledge of client's business. Obtain knowledge of client's business. Some lag or what? Hello? Yes? Okay. See me now? Flowy hands. Okay. Obtain knowledge of client's business. But please understand one thing. We are not MBA students over here. When I say obtain knowledge of client's business, what exactly you want? Why you want to obtain knowledge of client's business? Please understand. Because I want to identify what can go. To simply identify what can go wrong. Tell me today, if you are given audit of DMart, Tell me, what can go wrong in the financials of DMart, financial statements of DMart? Can I say DMart is going to come up with another IPO, FPO, yes or no, sir? DMart is coming up with FPO, yes or no, sir? Are you aware about it? Are you aware about it? Correct, they are not coming out. Alright. Someone would have faked being cool over here. Yes, sir. Don't do that with me, huh? I'll catch you. When a company is not raising finance, when a company is not coming out with new listing and stuff, then in that case, we are not worried about overvaluation of the entire financial. I'm not worried that the entire financials could be misstated. But yes, after understanding the business of DMart, I do understand their inventory and cash. These are the two areas which are at a lot of risk. Yes or no, sir? Yes, sir. So when I'm trying to understand what can go wrong, I'm simply trying to identify the inherent risk involved. Simple analysis after understanding the business, what can go wrong? Coaching classes. What if they book admissions in cash, don't attach turnover, thereby not paying the G? Simple. What can go wrong? There is a startup entity trying to raise finance. Okay, there is a possibility that the entire finance is. Simple analysis of what can go wrong. Yes, sir. Yes, sir. Achha, once I understand the entity's business, then I want to understand. At the end, I want to audit, right? So I want to understand that how they are preparing the books of accounts, who is authorizing the expenditure. All right. So that means I want to understand and evaluate entity's internal control. I want to understand and evaluate entities' internal control, their entire system. But tell me, hello, if you are conducting audit of Air India, you really want to know how air hostess is giving instructions to the passengers? No, 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 sir, no, sir. You want to know how they're actually flying? Even Air India does not know how they're actually flying. So please understand, if you just write entities' internal control, that means you're talking about their overall system, which is idle. Auditor is not worry about overall system. That is why I will add few entities internal control relevant to audit. I just want to understand their system, their accounts to the extent it is relevant for me. I'm worried, obviously, in Air India, I'm worried about how they are booking their revenue, their expenses, authorizing, all that I'm worried about. All right. So why do I want to understand and evaluate their internal control, which is relevant to audit? Why I want to take that step? Understand the control risk involved. What is control risk? Where the controls may fail. Tell me, in DMart, have you ever tried to steal something from there? I have done that. Basically, I just wanted to give them consultancy about their system. I've done that. You can just go there and try the DO there and there itself, no? Alright. Or in some shops where the security tags are not very clear, not there, you can just wear a t-shirt and just wear your own t-shirt again on that t-shirt. Try that. Alright. So what I want to tell you is, basically we are trying to just understand where the controls may and how much damage it can do. Once we are through with that, then it will finally help me to understand and identify and assess what can go wrong, how much can go wrong, where there can be error, where there can be fraud. The degree of risk of material misstatement, another favorite word in audit subject. The degree of risk of material misstatement. Whether due to error or fraud. the degree of risk of material misstatement, whether due to error or fraud. Means what can go wrong, how much can go wrong, where there can be error, where there can be fraud. Alright? Now tell me, the moment I tell you that you are conducting audit of a startup entity which is trying to raise finance, you will straight away come to know, oh, there can be a risk of material misstatement in the overall financial statement. The entire financial statement can go wrong over here. Oh, ROMM at overall financial statement level, that means something that affects many assertions. Something that affects many assertions. The moment I tell you that there is a change of CFO, inexperienced management, then you start doubting that the entire financials can go wrong over here. But in DMART, I'm not worried about entire financials. I'm worried about few areas over there. So risk of material misstatement at assertion level. That means in specific TBDs at individual level, what can go wrong? In specific TBDs at individual level, what can go wrong? In specific TBDs individual level, what can go wrong? Now you are with me. Alright. Now you are understanding what I am trying to explain. That means the very first procedure that auditor will perform is nothing but risk assessment procedure as per SA 315. All of this will really become very big at the end. If you miss out on these concepts, later on it proves very costly. Risk assessment procedure as per SA 315. So whenever I discuss audit procedure, the very first thing that auditor is going to do is risk assessment procedure as per SA 315. Auditor will always first try to understand the entity, the systems. He will try to identify, assess the risk of material misstatement at overall FS level, assertion level. First he will do his risk analysis and only then he will move on. Is everyone clear with this? Hello, I am not yet done with audit procedure. This is just first part of it. This is just risk assessment procedure. Just risk assessment procedure. Alright. Draw one line over there. Down arrow. Even if it goes to next page, fine, but show this continuation. After performing risk assessment procedure as per SA 315. So once auditor is done with his whole analysis, okay, where things can go wrong, what can go wrong, how much can go wrong, then auditor shall design nature, timing and extent. What to do, when to do, how much to do of FAP. That is further audit procedure. Further audit procedure. Students, if you try to understand, when I was teaching risk assessment procedure, I have consciously used the words understand, evaluate, understand, identify, assess. I've been very conscious over there because you cannot use the words examine, check, verify, inspect, examine, check, verify, inspect, test. Alright. Cannot use such words. Alright. When we talk about risk assessment procedure. So I have not used such words examine, check, inspect, verify, test. Now I am going to use such words because first I have understood that what I am doing, and now I will start testing it. That is further audit procedure. Everyone over here, please put a down arrow. Here you are examining, testing, verifying, inspection. Here you will check things. All right. That is called as further audit procedures. Here you will check things. That is called as further audit procedure. All right. Now listen to me. I think from here on, final year students have a little bit of comfort. All right, because I think you have heard about these words. TOC. What is TOC? Yes. Test of controls. Then substantive audit procedures. Substantive audit procedures are further divided into two. TOD, that is test of details. And substantive analytical procedure. Substantive analytical procedure. Now, what I did in my morning batch was, I did not explain this. I just asked them randomly whether they were able to answer or not. Right? I'll do the same thing with you. Just leave four lines below every point. Huh? 4-line content you will have. You can just start writing some examples. First, I will tell you what auditor is doing, and you will have to then guess whether this is risk assessment procedure or further audit procedure. Further audit procedure, it is test of controls, test of details, or substantive analytical procedure. Let me just see how much you recollect from Inter-C and how much whatever you understood I explained. First, auditor is conducting inquiries to understand the processing of purchase order. He wants to understand that how that entire purchase order system is. Conducting inquiries to understand the processing of purchase order. This is risk assessment procedure, further audit procedure. Very good. This risk assessment. Because he's just trying to understand the process of purchase order. Verifying anything over here. Is conducting inquiries to identify whether subsequent events have occurred that require adjustment or disclosure. Events occurring after balance sheet date. We ask certain questions to the management. Management, as on 31st March, you had filed an insurance claim. What is the status of that claim? Management, as on 31st March, there were some insolvency proceedings going on the debtor. All right, what is the outcome of those proceedings? Management, what is the outcome of the litigation that was pending as on 31st March? So to understand whether it is an adjusting event or non-adjusting event. Okay, tell me, this is risk assessment procedure or further audit procedure? Very good. This is further audit procedure. For students who are thinking risk assessment procedure, they are just, I think, little bit, they're just a little bit down or zoned out. They are not in at their 100% capacity. That is what I feel, because they are just looking at this word inquiries. Inquiries, no, asking question. Asking question means risk assessment procedure. We are just trying to understand. Hey, Baba, do you think by when the kind of questions that I was asking, right? What is the status of the litigation which was filed as on 31st March? Is there any outcome? Do you think I'm trying to understand the entity's business over here? Do you think I'm trying to understand the entity's internal control over here? I am purely just asking questions to understand whether it is an adjusting event or not. Tell me, I am trying to understand the business or I'm trying to actually find out the evidence over it? Trying to find out the evidence. Obviously, it is further audit procedure. Queries are used in risk assessment also in further audit procedure. So don't try to benchmark it with only assessment. Here, please, hello. Here I was conducting inquiry to understand the process. This directly tallies with my content. Right. Whereas the second inquiry was being conducted to finally get me the proof whether this is an adjusting event or not. Alright. So when you are trying to search for evidence, that is further audit procedure. When you are just trying to understand their business and the system, that is risk assessment procedure. I want a confirmation. Are you clear with this? Yes or no, sir? Achha, in further audit procedure, what do you think? This is TOC, test of controls, or test of details? What do you think? Obviously, it is test of details. Here you are not checking system of the company. You purely wanted to verify, alright, the detail, whether this requires an adjustment or not. Alright, so this is test of details. When I say test of details, now we go back to the content. When I say test of details, means I am trying to verify ACPD. Amount, classification, presentation and disclosure. ACPD, amount, classification, presentation and disclosure. Yes, sir. Whenever you are trying to verify ACPD, I mean anything with respect to assertions, that is nothing but test of details. Okay. Now next, let us say who are checking expense vouchers. You are checking expense vouchers to verify whether it has been correctly authorized by the designated person. To verify whether it has been correctly authorized by the designated. Obviously, you are checking the voucher, so this is further audit procedure. But please understand, you are not checking the amount, classification, presentation, disclosure. No. You are checking that the person who was supposed to authorize has authorized it or not. You are testing the system. Alright. Test of control. Test of controls. You want to obtain knowledge about the financial delegation matrix of the organization. What is this financial delegation matrix? That up to 50,000, X will authorize, 50 to 1 lakh, Y can authorize, 1 lakh to 1 lakh 50,000, Z can authorize. Friends, you are trying to go very fast. I understand it's a fast track batch, but it's not a marathon batch. This is risk assessment. You are not checking whether this 50,000 voucher was authorized by X or not. You are just trying to understand and obtain knowledge. Okay, X can authorize till 50,000. Thank you. Y can authorize till 1 lakh. Thank you. Z 1 lakh 50,000. Thank you. You are just trying to obtain knowledge. Who can authorize how much amount? That's it. You are just trying to understand the entity and its system over there. Assessment. Oh, yeah, yeah. Yeah, yeah. You understand the difference between theory and practical? So maybe when you are learning theory or when you are hearing great marathon lectures on YouTube, all right, you feel that you are understanding things. But it's about connecting with the MCQs and practical case studies, whether you will be able to apply that knowledge or not. All right. Next. Fifth. Lag. Hello. Okay. Hands flowy. Okay. Ratio and trend analysis. Ratio, you are doing a ratio and trend analysis of last 5 years. After the ratio and trend analysis of last 5 years, you understand that profits are declining. Managerial remuneration is increasing. Huh? Profits are declining. Managerial remuneration is increasing. That debt equity ratio has gone from 9:1, 16:1. Alright. Then you analyzed further, you realize that the company is borrowing at 8% and lending at 7% since last 5 years. They are trying just financially bleeding over here. Just purely financially bleeding. Alright. Very good. Some students started writing very quickly. The moment I wrote ratio, trend analysis and stuff, they started writing substantive analytical procedures, because substantive analytical procedures is when you apply ratio and trend analysis and comparisons. Alright, but listen to me. The wrong answer. Now listen to me very carefully. Eyes and ears wide open. That when you perform ratio analysis, trend analysis is just analytical procedure. There is a difference between the word analytical procedure and substantive analytical procedure. Alright. Analytical procedure are applied at planning stage, and they are also applied at testing and completion stage. Kirti, I am very happy with your answer. They're applied at planning stage, then they are also applied at testing and completion stage. Tell me, just apply your common sense. What do you think this entire analysis auditor is doing at P for planning stage or TC for testing and completion stage? This kind of analysis you perform at the start of the audit, right? And that is identify the risk of material mistake. So let me tell you that this entire analysis that auditor has done is risk assessment. Because at the start, when you also enter into a new relationship, or whether you decide you want to enter into a new relationship or not, you try to analyze the past, no? Odd, 6 boyfriends in 6. The risk is very high. Obviously, that means you are just doing a risk analysis. So please understand, at the start, when you are performing such kind of analysis, it's purely a risk assessment procedure. And when it is applied at testing and completion stage, that is your further audit procedure. That is your further audit procedure. And that will be called as substantive analytical procedure. Sir, can you give an example of testing and completion stage? Obviously, yes. You have done entire inter-se costing subject here. And number of workers, wage per worker, number of days work multiplied, and then come to a figure. Right? All of that is month-wise sales analysis. If there is any unusual fluctuation, try to investigate that. That is all substantive analytical procedure when you are testing something. Alright. But when you apply ratio analysis, trend analysis at the planning stage, it is assessment. So I will go back to the content and I will write over there substantive analytical procedures, ratio and trend analysis at testing and completion stage of audit. At testing and completion stage of audit. Testing and completion stage of audit. Done, everyone? Yes, sir. Yes, sir. Okay. Now over here, test of controls. We have already discussed test of controls. I'm just filling up the content now. Test of controls means you want to verify operating effectiveness of the relevant controls. Want to verify operating effectiveness of the relevant controls. Operating effectiveness of the relevant controls. Operating effectiveness of the relevant controls. Achha, listen to me. Hello. One simple question. One simple question. Let us say that if X was supposed to authorize 50,000 rupees, instead of that, Y has done it. Okay. If X was supposed to authorize 50,000 rupees, instead of that, Y has done it. That means the control was not followed. When control is not followed, alright, we say that we have identified a dash. It is called deviation. It is called as what? Deviation. Whenever controls are not followed, we try to say that, okay, this is a deviation. So verify operating effectiveness of relevant controls and identify deviations if any. Identify deviations if any. And whenever A, C, P, D, amount, classification, presentation, disclosure, when this goes wrong, then we say that we found a material misstatement. I mean misstatement. We try to find out whether there are material misstatements. Identify material misstatements. Identify material misstatements if. Identify material misstatements if any. I want a confirmation. Are you clear with this? Yes, sir. Yes, sir. You have all the examples that you need. Yes. You have the entire concept with you. Yes. So that is my concept of audit procedures. In any situation, hello, can we create a formula? Now you will understand what I'm trying to tell you. In any situation, auditor will perform risk assessment procedure as per SA 315 plus further audit procedure as per SA 330 Further audit procedure, entire concept is there in SA 330. That means auditor will obtain sufficient and appropriate audit evidence, verify, management's assertions in the financials. Verify management's assertions in the financials. Now you will get the technical language we are trying to say. Now listen to me. Further audit procedures, just a different name. Further audit procedures are also called as auditors' responses to the assessed risks. Further audit procedures are also called as auditors' responses to the assessed risks. Is everyone clear with this? Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. All right. Now I know that you are a little tired. Okay. So, anyways, the next concept that I have is a very nice flowchart kind of concept. Okay. So you will not feel heavy. After that concept, I'll give you some nice break. Okay. Please stay for one more concept, but. And it's a light concept. Okay. You will be able to get through with this. Concept number 4. Concept of audit evidence. Concept of audit evidence and various possibilities. Concept of audit evidence and various possibilities. Very simple, concept of audit evidence and various possibilities.